What's good, y'all? It's HB Punch and Profit. Let's break down the trade, the A plus setup you could have taken today. Unfortunately, I didn't get to jump in on this one. I was pretty tied up today. Was able to get a quick little scalp on my new 50K Express account with Top Step X, getting closer to my goal of getting 5 accounts. But unfortunately, they activated it very late in the day. It was like 3 o'clock by the time they activated it. So I just wanted to get a quick $200 day. So maybe I can get a payout on Friday. But anyhow, let's break it down. The A plus setup you could have taken. So we work our way up from the 9:30 opening, as you see right here. We just moving up, moving up, moving up, moving up, and then we hit a higher time frame PD array, a bearish fair value gap. Okay, then we get our signal. We get an inversion, and if you zoom in, okay, make sure you take into consideration volume imbalances right here. That's a bullish fair value gap, and it's inverted by this bearish fair value gap right here. We also have our advanced market structure shift. As soon as we close with a candle body, we enter. And even if you entered late over here, you would have been fine. You would have taken little to no drawdown, right? Only about 1 to 2 points. Okay, you can put your stop at the high. You can put it above the gap that breached the advanced market structure shift. Another thing you can do, and that I back tested that seems to work very well, is you can go from the advanced market structure shift, measure out about 6.5 to 7 points, right, which is roughly where the gap is. And that seems to be very reliable. When you don't get that little retrace, usually you're going to get your move to 50 points and more. If you start retracing into that gap, especially if you close, it's you might as well close the trade out. Most likely, it's not going to play out in your favor or even hit 50 points. I mean, I have seen it sometimes tag back up to the gap and wick and make that big move, but most of the time, you want to see it not even retrace and get that little breakaway and just move on down. And if you do get a retrace, usually you come down here and you'll kind of tap back into the advanced market structure shift or kind of a few points away from it, right? Like it did here. And that's why I kind of enter. Most of the time, I like to enter as soon as we get this candle body closed because sometimes it will leave without you. And you can put a limit order right here and you won't get tapped in. But if you want to take a more conservative approach and just wait till you get that entry on that limit order, you just have to accept that you're going to miss some of these trades, which is no big deal. But I would advise just enter in on the candle body close. Just make sure you're not over leveraging. Okay, so this, for the sake of the chart looking pretty, we'll put that red line back there. Okay, and you get your 50 points fairly easy and a little bit more. Okay, and you can manage risk or leave a runner how you feel. That's based off of you and your account and your risk orientation. One thing I would advise is as soon as you hit 25 points after the advanced market structure shift, which was came down here, didn't quite hit it here. It was this leg. You came down on this leg, hit 25 points. You want to move that stop up to break even. Okay, that way you can manage your risk, and if it decides to pull back on you, you don't have to lose anything. And yeah, you would have hit your 50 points easy. So that was the A plus setup for the day. There were also some other setups on the way up, trading with the trend. Okay, you had the 9:30 opening right here. You move up. We don't even retrace into the, I believe, was this the 9:30 right here? Yeah, this was the first fair value gap printed at 9:30. That white box. We don't even retrace back to it. We're pushing up. We're bullish on the higher time frame because it looks like we're aiming for the prior week high. We also took out the prior day high, and we go up and roughly around here you print this bearish fair value gap, right around here. Oops. And it gets inverted by this bullish fair value gap right here. Now when you're very confident in what the higher time frame is doing, and you know you're trading with the trend, and you get this little inversion right here, this is when I advise, as soon as this bullish fair value gap or this candle closes and inverts this bearish fair value gap, that's when you want to enter. Okay, you don't have to wait for that advanced market structure shift when you're trading with the trend like that, right? You can enter as soon as you close over this bearish fair value gap and run it up for, if you entered there, 50 points easy, boom, and more, right? If you wanted to. So that was the first setup that presented itself if you were trading with the trend. Very easy trade, very nice trade, little to no drawdown. In this case, once again, when you're trading with the trend, put it at the most recent low. You could, let's see, I guess you could put it roughly where the gap, okay, below the gap and give it a little room to breathe. But I would play it safe in this case, and I'd put it at the most recent swing low. Boom. 50 points easy. So that was a setup you could have played. And there was probably one or two more, not very clean setups, but were there, right? And that was it for the day. This is HB. Punch a profit. Comment down below. Like the video. Subscribe. I should be doing some trades early tomorrow, so hopefully I'll be able to post some live executions. All right. Peace out.